Hi, my name is Pat Collins. I'm a member of Greenspring's Investment Committee, and I'm going to be discussing highlights from the first quarter of 2023. First, let's start with asset class returns. It was green across the board for all the major stock and bond asset classes. This was a welcome change from 2022 when every one of these asset classes were negative in double digits. For this quarter, international stocks were the best performing asset class, with U.S. stocks closely behind. While returns were positive across the board, all of these asset classes were still negative for the past 1 year. It seems like the topic that everyone was concerned about in the first quarter was the fear that gripped the market after the failure of Silicon Valley Bank. Would there be more banks? Are my deposits safe? Bank failures are not new in the U.S. In fact, 2023 is not shaping up to be anything out of the ordinary when it comes to the number of banks that have failed. As you can see on the chart on the left, this time period pales in comparison to what the bank collapses we saw during the Great Recession. What is a bit different this time is the size of the banks that failed. We don't have time to go into all the reasons why Silicon Valley and Signature Bank failed, but the main takeaways we took from these charts is that bank failures do happen regularly and will probably happen again in the future. It is one of the features of a private banking system that we have to deal with. In this chart, we see all of the major financial disruptions we've experienced since 1980. Some of you may have forgotten some of these: the Asian debt crisis of the late 90s or the junk bond crash of 1989. Throughout history, our world has dealt with the growth and collapse of financial institutions around the world. Despite the continual financial crises this world has seen over the last 40 years, the stock market continues to reward patient investors. $100,000 invested in 1980 in the global stock market has grown to over $17 million by the end of 2022. There are a few lessons we can take away from all this. First, it's impossible to time the market. We have a crisis every few years around the world. If you try to trade in and out in anticipation of the market's reaction, you'll almost definitely have a serious case of whiplash. Second, while markets can be volatile in the short term, they continue to create wealth for investors in the long term. Companies and people will continue to innovate in the future. This process creates wealth for owners of these companies. Finally, keeping your assets diversified is so important. While the broad market experienced impressive gains over the last 42 years, one thing financial and banking crises teach us is that individual stocks can go to zero. Just ask the shareholders of Silicon Valley Bank. There really isn't a need to take excessive risk by owning single companies when the market rewards investors handsomely who are disciplined. Thanks for listening, and if you have any questions, please feel free to reach out to us.